Good evening to all our mentorship traders. We are tonight on a Friday evening, 25th of March 2022, 8 p.m. This is our Friday session, like always. Let's quickly first talk about the index, Nifty BankNifty, couple of sectoral indices, and we'll take a look at the top 15 stocks which make up the Nifty 50. After that, towards the later half of tonight's session, we will take a look at the stocks that you have in your portfolio and the others which you're eyeing to add next week. So I'm looking at the Nifty daily chart. Few good things, few things of a little concern. So it's a mixed situation. The good thing first, the trend is slow and steady, trying to reverse on the daily time frame. On the 75-minute time frame, we have a reversal. So what the index is clearly doing in front of us is, after this sharp rally, it's gone into a consolidation. This is the nature of price. This consolidation can clearly be noticed by the drop of momentum and also by a significant drop of range, that is volatility contraction. What does this mean? This means that brace yourself next week for a structural breakout. Next week, early next week, hopefully, is going to give us a short-term structural breakout from this congestion, very, very likely, primarily based out of the range contraction. Now, whenever we want to or like to or prefer to guess the direction of the breakout, it is always a sensible thing that stick to the underlying trend. Sticking to the underlying trend gives us some clarity which way it's going to break out. So you can say 55% chance it's going to give us a breakout on the upside, and then there is a chance of a downward breakdown also. Is there any evidence on the charts which indicate that there can be a downward breakout? Yes. We can see very clearly that the index had created a negative classical divergence on this daily time frame. The particular low of this divergence was this, and for the last 3 days the index has not broken below this low. So it has essentially slowed down after the divergence. Based on my experience, when an index, when the market creates, when the price creates a divergence, and if it has to fall, generally it falls immediately. Divergences, such short-term divergences, are essentially traps. And traps, after you get trapped, it's not that you get to realize after 3 or 4 days, oh, I'm trapped. It doesn't happen that way in the markets. Most of the time I've noticed that on the divergence, if the divergence has to reverse the price, it reverses immediately. If it doesn't reverse immediately, which is the case here, it's not reversed for the last 3 days, then the reversal is highly questionable. On the other hand, the continuation gains more possibility. So I would say 60% chance that it's going to give us a nice, sharp, decent one-day movement. And I think, and I think that it's going to probably happen on Monday itself, looking at the way the Heiken Ashes have shaped up. The index, we should not forget the fact that had gone through a significant correction, and now it needs to deal with some resistances right below the 17,500 mark, and it's got 17,750 and of course the psychological 800. So on the upside, the index has some levels to deal with, but the best thing that I can say from this particular Nifty daily chart is the fact that after this nice uptrend, it has not given back any of its grounds, especially keeping in mind that it had gone through a significant correction. What do I mean by this is, if you take a look at corrections, a correction, short-term bounce back, it does not do any kind of time pass. It corrects, right? So downtrends are short-lived, downtrends are more volatile, and after the downtrend, a short-term bounce back does not necessarily lead to a consolidation or a time pass and then the fall. Most of the time it's immediate, most of the time. And so whenever you notice, whenever you see any kind of a congestion after a bounce back in a downtrend, when the trend has started to reverse, it kind of tends us to expect a continuation rather than the reversal. So I'll go 60-40 next week, expecting a breakout from the Nifty, and you can use today's high. The high is around 17,296, so you can put an alert at 17,300 for a breakout on the upside. If you get this breakout, it is definitely tradable. From a risk reward point of view, it makes more sense. So Nifty trend has gone positive. Bank Nifty. Now, Bank Nifty, on the other hand, has essentially, for the last 3 days, has slowly but surely has come off. It has come off below this day's low, which it had created this divergence. So to some extent, Bank Nifty has shown a bit of weakness in relation to Nifty, because of course Nifty has various other sectors to support it, which Bank Nifty does not. So Bank Nifty seems to be a little bit more weakish. And very clearly, you would have noticed that the moving averages on my Bank Nifty daily chart is not positive. The slope is negative, the positioning is negative, the momentum is slowing down, the volatility contraction is also very, very evident. Now, this will confuse us because Bank Nifty is an important index. Banks have a much higher weightage in the overall markets. So if the Bank Nifty is giving us signs of weakness, and if the Bank Nifty breaks below today's low and corrects further down, then of course Nifty will find it very difficult to hold on to these highs. Nifty probably will find it very difficult to break above 17,300. So all eyes on the Bank Nifty. I'm going to take a quicker look at the Bank Nifty 75-minute time frame, and this is also not a very, very pretty picture. This is the 3-day correction that we noticed on the daily time frame. It's trying to just give us a small bounce back at the late half of today's trade. And yes, if 36,000 is not scaled anytime soon, then this index seems like is slowly losing its strength. Still in a downtrend, momentum on the downside. So this is a contradictory signal. So if the banks correct, the index may find it difficult to correct, and the index may open up on the downside, which is the Nifty. So you can keep a closer look at the banking stocks. If you notice weakness early next week, I think banks will be the pocket to go short. The mid and small caps are doing kind of okay. If you take a look at the CNX mid cap, it's holding on to an uptrend. The small cap is also doing okay, and this is the CNX 500, which you can clearly notice is dealing with this range-bound activity. So it's kind of a not exactly make or break. The chance of a make is much higher for the index, but yes, the black sheep can be the banks and the Bank Nifty drag the index further down. We did notice pretty sharp movement this week. I'll turn this chart from the daily to weekly. You can see some pretty sharp movement coming in from Bank Nifty, from the media. Pretty sharp movement on the weekly time frame, up over close to 7%. Metals have been doing phenomenally well, especially the ferrous stocks doing pretty good. Oil and gas has also given us a pretty sharp bounce back, almost 3%. On the daily time frame, it's in a nice uptrend. So that's oil and gas holding on to its uptrend pretty well. Media is in an uptrend. Metals is in an uptrend. So I'm marking all the greens over here. Public sector enterprises have moved into a short-term uptrend. FMCG. Now, before I go to FMCG, I would like to bring your attention to the public sector enterprise, especially keeping in mind that it is on the verge of a structural breakout. The index had tried its best to hold on to this uptrend, could not. Then it's again managed to find some strength. Momentum is supportive. It needs to deal with this zone. If you get a movement, yes, you can take a look at the index constituents. You might get a breakout from this space. FMCG was all about, I would say, ITC for the last couple of weeks, but the other stocks are not doing that great, and FMCG still is in a downtrend. IT has been doing pretty good. IT was the first mover. In fact, if I drop an info line from the lowest point to the highest, you probably see IT gave a pretty early movement starting from 24th Feb. It's up 13%. So short-term uptrend for the IT And yes, the weakness coming in from the banks can be countered pretty well by these stocks, by the energy, oil and gas, IT, this infra. This is consumption. Now, consumption is still in a downtrend, just like FMCG. Healthcare has moved into an uptrend. Sun Pharma has given a phenomenal move. Cipla is also doing some good, decent movement. So they're coming in. Auto is a problem. Auto is a problem. FMCG is a problem. And banks is a problem. Pharma is doing good. We took a look at healthcare. PSU Bank downtrend. Real estate struggling. It's neither an up nor a downtrend. It's flattish. Service, these sectors do not make up so much. Finance and then private bank. So we get the picture very clearly that it's the banks and the auto and the FMCG to look for if the index fails to hold on and you see weakness. And if it manages a move above 17,300, then yes, you can gain some movement coming in from the relatively stronger sectors: metals, oil and gas, IT, energy, and pharmaceutical stocks. All right, so that's our wrap on the Nifty, Bank Nifty, and the sectoral indices. Let's now talk about your stocks questions, the stocks which you have in your portfolio and the stocks which you're eyeing and on to your portfolio next week.